Okay, imagine this. You launch your company into what looks like a sea of pure opportunity, only to sail directly into a perfect storm. Well, that's pretty much exactly what happened to the Indonesian shipping company NELY. We've gone through a decade of their dense annual reports to bring you this 5-minute story of survival starting right at their big public debut in 2012. So, here's how we're going to track their journey. We'll start with that promising launch, then dive into the economic storms they had to face, see how they shifted to a disciplined rebuilding phase, and finally, check out the new vision that's steering their future today. All right, let's set the scene. Our story kicks off in 2012. NELY is launching its initial public offering, and honestly, the timing couldn't have looked more perfect. For the Indonesian shipping industry, the future looked incredibly bright. Now, the biggest reason for all this optimism was this crucial piece of regulation called the cabotage principle. This was a total game changer. It basically cleared the local waterways of foreign competition, which, as you can imagine, created a massive opportunity for domestic companies just like NELY. And here's the thing, NELY wasn't just some startup. No, they hit the market with a really substantial fleet of almost 70 vessels, all ready to go. They were perfectly positioned to ride this new wave of domestic opportunity. But you know how these stories go. The calm seas did not last. In fact, the ink was barely dry on those IPO documents when the whole story took a really dramatic turn, and the company faced its very first major test. Almost immediately, NELY sailed right into some unexpected turbulence. I mean, look at this. The government had projected strong growth and low inflation, but the reality? It was the exact opposite. For a brand new public company, this was a really bad first sign. And then came this gut punch of a number. A 26% drop in the local currency against the US dollar in a single year. For a shipping company that has international costs, for things like fuel and parts, a drop this severe puts just immense pressure on your bottom line. And it just kept coming. New government rules restricted key exports like coal, global demand for shipping just fell off, and a slowdown in China sent ripples across the entire world. So what was the direct result for NELY? A painful 21% drop in net profit in 2014. So how did the company react to this perfect storm? Well, in their official annual report, the message was one of steel-spined unity and pure determination. With the global economy totally out of their control, NELY did the smart thing. They turned their focus inward. This next phase is all about survival and building a resilient foundation by focusing on what they could control, their own operations. Their strategy became super clear and methodical. It was all about these 4 core areas. First, diversify the customer base, so they weren't so reliant on just one industry. Second, hunt for every single possible efficiency, especially with those crazy fuel costs. And finally, double down on the fundamentals, keeping customers happy and making sure their fleet was in absolutely perfect condition. At the same time, they weren't just fixing the ships, they were reinforcing the entire corporate structure. They beefed up key oversight roles to improve transparency, manage risk, and most importantly, build trust with their stakeholders during a really uncertain time. But look, this internal focus, it didn't create some overnight miracle. You can see the grind right here in the numbers. After another sharp dip in 2016, a slow recovery finally began. This wasn't a story of explosive growth. This was about the hard, unglamorous work of just stabilizing and surviving. But all of that disciplined, heads-down work, it wasn't just about survival. It was actually laying the groundwork for a brand new and much more optimistic chapter in their story. And that brings us to the modern era for NELY. I mean, after weathering so many storms and patiently rebuilding from the inside out, where does a company like this chart its course from here? And here it is. Here is the financial payoff for all that patience. In 2022, earnings per share, which is a really key measure of profitability, it didn't just grow, it exploded. It more than doubled from the previous year. This was the undeniable signal that the company's long, grinding comeback strategy was finally working. The shift wasn't just happening on the balance sheet, though. In 2023, a major leadership transition marked a strategic pivot towards a new generation and a whole new future for the company. This new ambition was captured in a powerful new vision, NELY 100. After years of just focusing on survival, the company was now looking ahead, focusing not just on the next quarter, but on building a real legacy for the next generation. So, after charting this really turbulent 10-year voyage, what are the key lessons that we can take away from Nellie's story of survival and, well, its ultimate revival? Looking back, this timeline really tells the whole story, doesn't it? It starts with the promise of a protected market, which gets shattered by crisis almost immediately. That forces a pivot to internal discipline, which leads to this hard-won financial rebound, and ultimately a complete reimagining of the company's long-term future. When you boil it all down, Nelly's decade-long voyage is just a masterclass in corporate resilience, and it was built on 4 key pillars: having a strategy that could adapt from expansion to survival, smart financial management, strong governance that builds trust, and a vision that always looked beyond the immediate storm toward a distant horizon. So this leaves us with one final big question. That cabotage principle that once protected NELY is now attracting a flood of new domestic competition. So having proven it can survive a storm, the company's next great test will be to see if it can navigate a sea that's now full of rivals.